So welcome back to Everything Marketplaces, where we talk with founders and leaders on some of today's top marketplaces. So this is episode 74, which is a really great group chat that we just had with Jeff Weinstein, who's a partner at FJ Labs. So FJ Labs is a marketplace-focused fund that's invested in over 700 marketplaces like Farfetch, Rappi, Flexport, Lime, RigUp, and many more. So this is a really great group chat that we just had with Jeff, where we got to learn more about FJ Labs as leading marketplace investors. We discussed some characteristics of great marketplaces, got to hear some insights from investing in them, and also had a great Q&A for those on the chat. So really enjoyed this conversation, and I know you're going to find it a great watch to the end. So Jeff, welcome to the group chat. It's definitely great to have you join us here today. So this chat has been a long time in the works, as I know you and the team at FJ Labs are very busy, but I'm really excited to dive into marketplaces on the investment side with you here today. Before we jump into things, though, I think it'd be great if you can start off by sharing a little bit more on your background for those that don't know you.
Sure. Well, thank you. It's a pleasure to be here. I am a partner at FJ Labs. We are an early stage venture firm and startup studio focused on online marketplaces. I co-head the investment team. We've made over 700 investments historically in startups, in marketplaces, including Alibaba, Betterment, Coupang, Delivery Hero, FanDuel, Flexport, Rappi, Nuvum Shop, and more. And I also manage our external fundraising efforts. We started off as the family office of two tech entrepreneurs, Fabrice Grinda and Jose Marin. Fabrice is a three-time founder. His most recent and notable exit was a business called OLX, which isn't very well known in the US, but it's actually one of the world's leading online marketplace platforms. It's an online classified site similar to Craigslist, but for the emerging markets. And it's a market leader in over 40 different countries with over 300 million monthly unique users. And he sold that to Naspers in 2010 and stayed on as CEO until 2013. And then Jose founded a marketplace as well. He founded an auction site similar to eBay in Latin America called Deramati.com. And he merged that with Mercado Libre, which after merger has become far and away the largest tech company in Latin America. And so I personally joined FJ about 4.5 years ago. Prior to that, I was at another venture fund called Lux Capital in New York for 4 years. And I come from a finance and economics background. I worked for a multi-strategy fund of hedge funds for a couple of years after university. So yeah, that's me and FJ. I'd be happy to answer any questions.
Yeah, no, that's great. Thanks for sharing with us. So, what specifically led you to the world of marketplaces, particularly yourself?
So, to be honest, I was at Lux for 4.5 years. I've always been fascinated by venture. I've always loved business. I've always loved technology. And when I first discovered that there was a chance to combine my two passions into one field, it was mind-blowing to me. And so that's how I was actually, I grew up building computers, and I spent all my time playing video games and being on the internet. And I also grew up loving investing, but I didn't actually know, maybe because I'm from New York. And so New York, it was always traditional finance. There didn't used to be really a venture ecosystem in New York. So I didn't really learn about venture until 2012, 2013. And then I actually purely just saw on my college job board a posting for Lux Capital. At the time, Lux was a pretty small firm. They had just raised their fund 2. And so that really opened my eyes to the industry. And that's how I got into venture. And then I was at Lux for 4.5 years. I was doing primarily LP fundraising, helping, raising the money for our fund. When I got back in touch with an old colleague of mine, we had been friends for 10 years, and he used to run FJ Labs, and he said he was starting a company and that I should join FJ. And so it was at that point, meeting Fabrice, that I learned, about Fabrice. Is, in my mind, he's like the marketplace god. And so I got a chance to basically apprentice under him. And I have had 4.5 years now learning from the god on how to build and how to invest in marketplaces. And it's been really transformational.
Yeah, that's great. He actually did a workshop with us here in the community in the past. So it was a really incredible workshop. So how, out of curiosity, how has FJ Labs maybe changed kind of, since you first joined to kind of now?
Sure. So when I joined, it was Fabrice and Jose, the two founders of FJ, angel investing their own money in startups, primarily marketplaces all around the world. The way it's changed is we frankly professionalized a lot. I brought a lot of the learnings that I experienced at Lux in terms of building and scaling an institutional venture firm. I brought that to FJ. So when I had joined, our fund one of external capital was a $50 million fund one LP, one external investor. It's a large Norwegian telco called Telenor. They owned a bunch of online marketplace properties in Southeast Asia, and they didn't know what to do with them. And they wanted to learn from Fabrice and Jose how to operate these marketplace properties. So as part of the deal, they gave us money to invest. We gave them learnings on marketplaces all around the world, and then also gave them advice on how to manage their marketplaces. And so I joined shortly after that in 2017, and I helped structure the fund into more of a traditional venture fund. So now we have, our last fund was about 20 investors, a lot of family offices, a lot of entrepreneurs. And now we just had a close on our next fund, our fund three. Similar story, a lot of family offices, a lot of entrepreneurs, and some institutions. And so now we've developed more process, more structure, and we're moving towards becoming more of a an institutional venture fund versus a family office.
Got it. Yeah, and I think most of us here, are familiar with FJ Labs, but I guess for those that might not be as familiar, could you give us kind of like a high level overview of it?
Sure. So we really have two practices, and one has really become kind of the main focus. And the way you can think of us is you can think of us as angel investing at venture scale. And so when I say angel investing, what that means is we truly act like individual business angel investors. And so that means we're not leading deals, we're not setting the terms, we're not taking board seats, we're not hands-on, but we have assembled the world's largest portfolio of online marketplaces. We have vast experience running and incubating marketplaces. And so our value add to entrepreneurs is we have this incredible portfolio of marketplaces that we can share learnings, we can give you KPIs, we can help you understand best practices, we can give you advice when you ask. It's purely like a passive thing. You come to us and you tell us what questions you have. We will never impose on you. And we write small tickets and decide quickly. So our typical investment size is 250 to 500K. We're typically making up something like 5 to 20% of a round size. And we decide in 2 phone calls, provided there's a lead in terms in place. So a typical round might be a $3 million seed round led by NFX, and we'll come in for 150 to 300K. And we will, once the lead is in place, we have a first phone call where we get to know you. We ask a series of questions. We try to understand the business. You have your lead investor. We take a very quick second call from someone else on the team, and then we make our final yes or no decision. And it's really that simple. And the other thing that we're super helpful on is not only just the marketplace portfolio and expertise, but it's actually future fundraising. Because we are angel investors, we're not leading. There's no incentive misalignment. When you raise your next round, we're happy to introduce you to all of the marketplace investors around the world that matter. And Fabrice at OLX was backed by Jeremy Levine at Bessemer. He was backed by Founders Fund, Peter Thiel. He was backed by General Catalyst. All these amazing marketplace investors, we can get you in front of them and get you a warm intro. So helping you raise your future next round.
And so, yeah, you've probably seen, I mean, at this point, I'm sure like thousands of pitches, right? So what are some of the common traits of, some of the great founders and kind of marketplaces that stand out?
One of the interesting things about marketplaces versus deep tech, where I was at Lux before, is we think that technical chops is not necessarily the defining factor of a strong marketplace. And that's why one other unique element of our arm, by the way, is we do a bit of venture building as well. We've recruited at MBA programs all around the country, and we have pre-seeded founders and been more active and hands-on in those companies in exchange for higher ownership. We've done that about 1 or 2 times a year for the past years. Our 2 big prospects at the moment are Properly, which is kind of like a Zillow for Canada, both with the instant offers and also with the discovery portal. And then Mundi, which is trade finance, lending to Mexican freight forwarders to trade with the US. And so what we've basically seen is that, frankly, MBAs, even though they're maligned in the rest of Silicon Valley, we think MBAs make excellent marketplace founders because marketplaces are execution risk, not technical risk. The marketplace playbook, it's been and done. It's been refined over time, and it's really all about execution. And so we're looking for fantastic storytellers who can execute. And the reason we think storytelling is very important is because it reduces the slope to recruiting, fundraising, biz dev. All of these functions are made easier if you have an amazing storyteller. So we want to see someone not like a snake oil salesman, not like a showman per se, but someone who is an amazing storyteller, who can effectively communicate and who can inspire and who can also execute.
Got it. And then, with the, I guess you mentioned the venture arm. So are you bringing them in, pre-idea or at what stage?
With the venture building arm, we do that. Yes. It's typically, our program has historically recruited first-year MBAs before their second year. They will apprentice for us the summer before their second year of business school, and then throughout the second year. And then upon graduation, when we have conviction in them and the idea, and they have conviction in the idea and they want to work with us, it's a double opt-in process. We will then precede them. Historically, the deal has been about $750K for 35% of the company. And then we will also help them raise their seed round, and we will commit $2 million at either $8 million valuation or at what the market dictates. So typically, frankly, in this market, they've been getting much more favorable terms than that. And so we'll come in alongside the terms that they get. But we do that 1 or 2 times a year. And in that, we will take a board seat. We'll take 1 board seat and 1 observer seat. And we will be very hands-on in recruiting, in helping develop product, in helping think through go-to-market, and then very helpful in helping them raise their seed round.
Yeah, no, you kind of mentioned a point as far as, things are kind of changing. So, the world of startups and especially fundraising, I believe is definitely changing and, evolving. So, I'd love to learn more about a little bit more about, how you kind of see things evolving right now for those that are, building marketplaces.
Well, in marketplaces specifically, we've had an overarching thesis in that marketplaces, we call it marketplaces 3.0. And the concept is that marketplaces are moving from a listing-based model to a transactional model. And so you've seen that with classified sites going transactional. And so we think that more and more marketplaces are building out functions which help them own more of the transaction and help bring it all online. So a perfect example of this is Uber. Now, Uber is taking care of the payments, Uber's taking care of the dispatch, Uber's taking care of customer reviews and safety and trust and so forth. So that's a continued theme that we see across verticals. We're investing in a lot of B2B marketplaces now, and many of those are starting to build in their own payments, even lending. So we think that going forward, marketplaces will continue to be more and more, if not managed, transactional. And so that's a trend that we're seeing. In terms of the market writ large, it's never been a better time to start a marketplace. Capital is overflowing everywhere. I think marketplaces are at the forefront of the digital transformation that we're seeing in the economy. And so companies, it's interesting, we have this internal tension all the time. Valuations have never been higher, but company growth metrics have never been higher either. We're seeing more companies growing faster than we ever have before. So it is really an amazing time to be in early stage startups.
Yeah, I can certainly agree with you on that. So you did mention, the evaluations, the kind of the metrics, are being moved up. So could you maybe share like a kind of maybe like a ballpark example on that with us to give us an idea of, I would say maybe like a seed and then kind of like a Series A?
Sure. So in terms of growth rates, we used to think 20% month over month growth was fantastic. And don't get me wrong, it still is, but more and more we're seeing 30%, sometimes 40% month over month growth. And so it's not uncommon to now see 5x year over year growth in some of these startups, which is I mean, that used to like break the charts beforehand. So it's been really pretty amazing to see how some of these companies are scaling faster and faster. In terms of valuations, I can tell you that we used to think of the standard pre-seed round as something at like 1 at 4, and then a seed round would be something like 2 at 8. And of course, there's huge variance. So like these are heuristics that do not necessarily apply to everybody, but more and more we're seeing companies raising straight off the bat, like 2 at 10, and sometimes way crazier than that. It really depends. If you're a second time founder, I mean, these rules don't apply. But we're seeing first time founders now go off the bat raising like 2 at 8, 3 at 12, which is pretty crazy. So yeah. I mean, we're seeing now, and especially in some of these regions, like where capital used to be scarce, like Latin America, we're seeing, like, we saw a company today raising pre-launch in Latin America 4 at 16. So it's crazy out there.
Yeah. So, certainly. Yeah. So on the note of, emerging markets too. So I believe you guys have quite a few emerging market investments. Is that correct?
Yeah, Fabrice, given the OLX background, Fabrice is very, very well known in a lot of the emerging markets. I mean, OLX is a market leader in Brazil, India, Pakistan, Nigeria, Kenya, all around the world. So for that reason, we've always been very active in investing in emerging markets, particularly Latin America, where Jose also built his startup. So now it's exciting to see all of the enthusiasm and the capital flowing in, but I mean, FJ's been doing that since before it was cool.
Yeah, we have quite a few in the community, so I'll probably jump on here during the questions. So I'm really curious to learn more about what are some kind of industries or maybe markets where you see some unique opportunities exist for marketplaces, and maybe even some like specific examples of marketplaces that you like to see exist.
Sure. So the continued verticalization of horizontal marketplaces is something that we continue to invest in. So horizontal marketplaces being like a Craigslist, typical classified sites, we believe that, and we're seeing that within one of these horizontal marketplaces, you can build vertical marketplaces with very specific feature sets. The quintessential example is Airbnb. When you go vertical, now you can start looking at actually like what it looks like inside the property, and you can offer very real estate specific features. Or if you go on a SeatGeek or a StubHub, you can see where in the arena you're sitting. These are things that traditional classifieds horizontal platforms cannot offer. And of course, that applies to many, many, many different categories. And so we believe that most of these market sizes are dramatically underestimated. I mean, you look at Etsy, which was like craft goods. I think their market cap's north of 40 billion now. It might be even way higher than that. I haven't checked recently, but like, who would have thought a couple of years ago that Etsy could be as big as it is now? So we're investors in some very niche marketplaces. We're in a trading card games marketplace called TCG Player. That's largely Magic the Gathering, but they're doing hundreds of millions of dollars of GMV this year. We've seen marketplaces for pool rentals like Swimply, which is doing very, very well. We're not investors in that one, but we're looking at it actively. We're investors in a stamps marketplace called Hip Stamps. We're in a pizza ordering marketplace, which is people think is niche, but it's actually not at all niche. So Slice is you can think of it like a Shopify for restaurants. They don't take care of the delivery, but they basically offer a back office function, and they help with online ordering and even phone ordering for pizza places. They're doing north of a billion of GMV. So these marketplaces, which are thought of as niche, are way bigger than people realize. The other area which we're really excited about is B2B marketplaces. In general, B2B, we feel like, is over a decade behind B2C in terms of digital transformation. So there is and trillions of dollars are being transacted using like the stereotypical pen and paper and spreadsheet. And it really is true. And so bringing B2B commerce online continues to be a massive opportunity all around the world. And so in addition to the actual marketplaces, we're also seeing marketplace enablement. So we're seeing a big trend now in bringing online checkout to B2B marketplaces, just like you see with B2C. So Bolt is a really exciting B2C marketplace enabler offering, online, smooth, quick online checkout. We're seeing startups doing that for B2B now. And in terms of exciting B2B marketplaces, we're in one called Node, which is a petrochemicals marketplace that's doing fantastically well. We're in a truck driver marketplace called Tread, based out of Canada. We're in Workrise, which is an oil rig staffing marketplace. We're in Job and Talent in Europe, which is a gig economy staffing marketplace. So the opportunities go on and on and on. And not only can you find interesting categories, but with our approach, you can actually look at the same category and the same model and apply it across different geographies. So we get excited about, call it, Node, the petrochemicals marketplace in the US. Maybe we'll invest in a Node for LATAM or a Node for Europe or things like that. So lots and lots of opportunities at the moment.
Yeah, there's a lot of great examples that you just gave us, and I love the Slice one too. So that's a really cool marketplace.
Yeah, and by the way, we've looked at Slice for Chinese food because the supply side is actually different. There's not much overlap between the third generation pizza shop and then the Chinese restaurant. You can actually potentially even do verticals by cuisine, verticals by geo. So we've looked at like Slice for LATAM. Obviously, it might not be pizza in LATAM, but the same concept of enabling these SME merchants and helping run back office operations for them.
That's awesome. Yeah, so I'm really interested to learn more about, with all these different kind of markets and the different industries, what is like the team like at FJ Labs, and where do you what's your day-to-day maybe even?
So we're a very lean team. We have 33 total. A lot of that is back office. We have 7 investment professionals. And so we have Fabrice and Jose, who are the founders. We have the 2 partners, myself and my partner Arnie. Then we have 2 associates, and then we have an analyst. That's the core investment team. And every decision that we make is done over 2 weeks with 2 phone calls. And then we also have a platform function. We call it head of portfolio, head of platform, but their role is basically to facilitate community and cross-selling and connection among our massive portfolio, and then also to be on top of any portfolio fundraisers to make sure that we can help them in advance of their next fundraise. So really, I'd say 8-person investment team. In terms of day-to-day, I mean, it's really frenetic and hectic. We all are kind of running around. A day might consist of helping a portfolio company, taking new investment calls. We have actually 2 investment calls per week. We have a portfolio investment call, and then we have a new investment call. And in addition to that, I have recurring deal flow sharing calls with VCs all around the world. And mostly marketplace focused funds, but there are a lot of generalist funds that do a lot of marketplace deals too. And then I also personally do a lot of the LP fundraising. So meeting with prospective investors in our fund.
Got it. How big is the world of kind of, I would say like angel investors and like early stage investors when it comes to marketplaces?
Getting way, way bigger. It used to be that there were specific partners at specific funds that you would target, and there still kind of are that in like the Bay Area. So I can tell you the funds that come to mind who we really like working with: NFX, of course, and then you have partners like Sarah at Benchmark, you have Jeff Jordan at Andreessen, Andrew Chen at Andreessen, and then you have Alfred at Sequoia, and then you have Version 1 Ventures is a great seed fund we work with. But this is expanding a lot. So now you have Wave Capital, which is a new fund which does marketplaces. You have Point 9 in Europe. They do a lot of really interesting marketplaces. We do a lot in Europe and LATAM as well. And so, frankly, our universe is probably, I would say our universe is like in the hundreds. So our 2 associates, they each have about 50 recurring deal flow sharing calls. And then Arnie and I we probably have another 50 each as well. And that varies between quarterly and, every 6 weeks and every 4 weeks. So it's a good time to be building marketplaces from a fundraising perspective.
Yeah, that's really great to hear. So.
And then you have some specialists as well. You have like Nosara Capital. They focus on B2B marketplaces. You have Prudence Capital. They focus on prop tech and real estate marketplaces. So And then you have, of course, the geo specialists like a Golden Gate Ventures, which is focused on Southeast Asia, or Canary, which does Brazilian pre-seed. So a lot of different marketplace investors out there.
Awesome. So we're going to jump into questions here in a second, because I have a few. But before we do that, so you have some really incredible experience, on the investment side with marketplaces. So do you have any kind of like tips or that you like to share with us as maybe early stage marketplace founders that are fundraising?
We care a lot about unit economics. Even if you're very early stage, we'd like to make sure that you've thought through potential unit economics. And what we really care about is we want to understand margin structure. We want to understand CAC, the quintessential CAC to LTV ratio. Typically, we'd like to invest either if your unit economics are already working, or you have a very clear path to working unit economics, and you can make a credible argument that helps us see the light there. We do not like to invest in businesses with underwater unit economics, where you basically claim that you're just going to kind of grow into working unit economics. And so my advice to early stage marketplace founders is really think through your unit economics, show that you're very analytical and metrics driven, and make sure you're on top of all of your numbers. And so with the numbers that we like to see, AOV, average order value, take rate, gross margins on your take rate, and then like the different layers of gross margins. We want to understand your net contribution margin, your order frequency, your lifetime value. We like to see it over 6 months, 12 months, and then like your true customer lifetime. We want to understand your recurrence. We want to understand your cohorts. We want to understand, your retention. I guess lifetime kind of covers that. And yeah, CAC, both paid and blended, and then how that's been trending over time. Yeah. Unit economics matter a lot to us.
Yeah, awesome. That's a great segue into questions, because I know that's going to prompt a few here. So we'll just go ahead and jump into them. Hey, Tomas, did you want to jump on?
Yeah, sure thing. Thanks, Mike. Also, Jeff, really appreciate this conversation and your time. This is incredibly helpful. So I had a question, I added this in the chat. Essentially, I wanted to double down on one of the observations you had made about marketplaces characteristically being more execution focused as opposed to tech focused. So one question as an implication of that observation is, how far on average do you see platforms or marketplaces really growing using no-code tech, while still, from the perspective of your firm, being willing to invest?
That's actually changing. I think a couple of years ago, we may not have wanted to see a startup progress that far on no-code tech, but frankly, the advances in no-code have been quite substantial. And so I think we'd go pretty far now. You're seeing frankly, everything is becoming in many ways like API-ified. That's not a real term. I just made that up. But I would be open to seeing things way later than I had before, provided I buy that things are really working, and that you have a command and control of the underlying dynamics of the marketplace, that things are working because you're in control, not just by accident, and that it's kind of a sustainable moat that you're building. So I would want to make sure you haven't just stumbled onto something, or if you have stumbled onto it, you understand the inner workings of your marketplace. Does that make sense?
Yep. Yeah, definitely. So it's more of really getting down to the fundamentals, regardless of the tech, really getting clear on the core engine of the business.
Yeah, exactly. Yeah. But frankly, we think that more and more marketplace founders will be able to build on these no-code tools, on these low-code tools, and I think that's a good thing. I don't think we necessarily will penalize people for standing on the shoulders of giants, you know?
Mm-hmm. Cool. Thanks so much.
Awesome. That was a great question. I'm glad you asked that, Tomas. So it didn't seem like I was just just trying to promote no code all the time. Cool. Hey, Patrick, do you want to jump on?
Hey, Jeff, thanks for joining us. Really appreciate it. Personally, super interested in vertical B2B marketplaces. Done a lot of work in the space. I had a question for you. When you guys are looking at marketplaces, do you prefer kind of ones that can command a strong take rate right off the bat, or ones that are trying to monetize through alternative means? So having a SaaS fee, the embedded fintech, because there's a lot of I've seen pushback on take rate from the supply side. So just curious how you think about it. Would you prefer high take, no alternatives, or just kind of low take and we'll figure it out later through these other kind of value added services?
Typically, B2B marketplaces are high average order value and high recurrence, which means that a high take rate is not usually sustainable. So when in most of the B2B marketplaces we're investing in, the take rate is quite low, like low single digits, or they are, to your point, they're monetizing off of value add services, embedded fintech and so forth, credit, I guess it's kind of subset of fintech. But so like, to give you an example, one of my favorite B2B marketplaces that we're investors in, it's actually really, I mean, we're investors in a business called Fresha, which is it's a spa, salon, and booking platform. This is B2B. But what they're doing is they've free so they've offered a free SaaS tool to lock in the spas and the salons. And then from there, the spas and salons will basically move all of their appointments onto the platform. And there they will, from there, they've actually created huge payments volume. And now they've negotiated a preferred deal with Adyen. And so from the spa and salon perspective, it's actually cheaper to offer payments through Fresha than it is to go direct. And so then they move all of their payments on there. They've got all that billions of GMV flowing through the platform. Then they layer on a discovery marketplace, and then they can take a 20% take rate on new bookings. But for repeat bookings, it's actually free from the perspective of the spa salon. So I like the lock-in of offering the free SaaS tool. And then I think about other marketplaces. We're investors in one called Tundra. Tundra it's kind of like a fair competitor, but they're really going for like very, very large brands versus the bespoke craftsy type of merchants that are using fair. What they do is they charge no take rate, but they monetize on bump ups on promoted listings and on value add services. And when you're dealing with volumes that are large enough, like spend that's large enough, you can actually get a high effective take rate from that.
Gotcha. That makes a ton of sense. Really, really, really smart move by Fresha.
Yeah, it's pretty amazing. And by the way, the Fresha's competitors are vertical SaaS tools that are charging subscription. So if I'm a spa or salon, why would I ever pay for? And this is venture VC funds have funded competitors like Booksy and Boulevard and a bunch of others. And for the life of me, I don't understand why would a spa or salon use a comparable product that charges a SaaS fee versus a free product that offers the same functionality and best in class payment terms. So I think it's just a structurally advantaged model. I think Fresha is going to dominate the world. So I'm very excited about that one.
That's awesome. Yeah, I think the SaaS enabled marketplace idea of having the free software to hook them in, and then also a place they can actually transact their businesses. Super smart.
And charging a take rate on discovery.
Yeah. No, I think you can charge on new transactions. You can get away with charging a lot more than on business they're already doing that you're now trying to take a commission on.
Exactly. Yeah.
Super helpful. Appreciate it.
Yeah, no problem.
Yeah, that's a great question. Hey, and it's a really good example. I'm kind of interested to learn a little bit more about that, though, Jeff. So for instance, for Fresha, so what kind of stage were they at when you guys invested in them, and what kind of metrics did they kind of have to kind of demonstrate the sequencing of the business?
So Fresha was an interesting one. We came in a note before the Series B. At the time, they were barely monetizing, but they were doing about $2 billion of GMV through the platform. but they convinced me. The way I thought about it was, okay, they have 10,000 merchants on the platform, and they're just offering this free SaaS tool. They have 10,000 merchants with about 2 billion of GMV flowing through the platform. They are going to approach, like, now that they have this 2 billion of GMV, they can go to Adyen. They got one of the founders of Adyen to personally invest. And then they're going to basically offer best in class terms. I think they were charging like 60 bips or 1% or something really low on any payments that would flow through online. But then the vision is they would actually set up point of sale systems and then be able to capture offline payments as well. And so and they basically, the way I looked at it is I thought about what is the hypothetical revenue that they could earn per merchant. And at the time they had done a couple of demos. They started in Dubai actually, and that's where they were originally headquartered. And they basically ran 50 tests with local spas and salons, and they showed this is the amount that we can earn per merchant here. This is how much our CAC is currently. And the merchants were paying back in like month 1 or month 2. The economics are just amazing. And I said, all right, like, yes, this valuation is high if you look at like a traditional revenue multiple, but if you think about what happens if they can monetize a good fraction, call it 10% of their customer base, this is going to be cheap in comparison. And so that's the way I thought about it. And so it's worked out well. They have been able to monetize quite well. And they've since raised a bunch of really nice rounds from very prominent investors since then. Awesome.
Yeah, I'll have to check them out more. Sounds super interesting.
Yeah.
Cool. Hey, Matthew, do you want to jump on?
Yep, with pleasure. Matt from France here. It's actually a good follow-up question to the previous one. I'm one of the co-founders of a company called Colette, and what we do, we help senior people monetize their empty rooms. And so we vet students that we place in those rooms. We're very early stage. We're only active in Paris. And the question here for you is, at our stage, very early, pre-seed, do you value more kind of the unit economics of the model or the growth / the size of the GMV? And why am I asking this question? Because we are in the period where we need to decide quickly if we want to expand to new cities before or after the fundraising. So yeah, I would love to have your take on this.
At the pre-seed stage, frankly, we just we extremely care about quality of team. So in your case, I would just go deep in your background, like your storytelling abilities, your history prior to building this, and if I think you're a strong founder, and then because it's not hard to put up impressive growth numbers off of a very small base. Like if you 3x year-over-year growth, if you had like, if you had $100, now you're at $300. That's not very impressive. It doesn't really mean much. So the growth, obviously, like I think growth is the North Star for a lot of VCs, but I think you can't really over-index on growth at pre-seed stage. I think pre-seed is founder market fit. And then I'd also be interested in kind of competitive landscape and like ability to raise capital. So, but I would, to my point before, I would want to make sure you have a loose, like a hypothetical understanding and a credible argument of unit economics. So, because presumably it's too early to can't really tell your CAC yet, can't really tell LTV yet, but I'd like to understand okay, how are you monetizing? What's your margin structure? And like how credible are those arguments that you're making?
Cool. Yeah, makes sense. Good advice.
Cool. Hey, Jeff, I actually had a question someone sent me, and it was about tips for pitching over Zoom. So do you have any kind of tips that you could share with us of maybe some really great kind of pitches and some attributes of that?
It's interesting. I haven't really had an in-person pitch in years now. So in terms of the Zoom versus in-person, I barely remember what in-person pitches were like.
So I guess I can give you a little bit of context. So for in the community, we've had some that, it's like a first or kind of second time with the fund. And some of the founders were just mentioning, they had like multiple partners on, and they just kind of felt like a little bit pressured and, like hard to kind of open up and really tell their narrative. So, do you guys have multiple partners on? And like, is there anything that like you've kind of seen that like has just like really stood out, where some of the founders have had like a great ability to kind of story tell?
It's a very good question. I can only speak for us. We do one-on-one calls typically, where we have 7 people on the team taking these calls, and it will be one person on the team takes a first call, presents to the IC. The IC, then we have like a debate. We think about what questions we want to focus on, what areas to probe further. And then the most skeptical person on the team takes the second call. And then in that second call, that person will probe, and that's a one-on-one call as well. I personally typically don't like the prepackaged narrative, someone speaking off of a pitch. I like to keep it conversational. And then I'd like that person to basically be dynamic and short and to the point. I would prefer someone who's more concise than is kind of going on and on. And I like to interject with questions and keep it conversational. But I also understand that that's just me personally, and that it can actually be quite effective to use a deck or some overarching narrative document to get the point across. But typically, when someone reads off a deck, they lose some of that dynamism and they lose some of that natural, spontaneous energy. So if you can use a narrative structure similar to a deck, but not read off the deck, that's probably the best of both worlds.
Awesome. Yeah, that's actually kind of goes into another question that comes up quite frequently, which is the kind of the topic of sending a memo versus sending a deck or not sending a deck in advance. So do you guys have a preference with that?
We always like to see decks. Frankly, I understand that there's like this push and pull where you want to control information or you want to basically tell the story yourself. But for us, it just saves time. We get 100+ inbound pitches per, or submissions or emails per week. So we're inundated with information, and frankly, a deck is an effective way to tell. And like I think we're pretty good at distilling the signal from the noise, and your deck, as provided it's an accurate representation of what you do, we'll be able to tell if it's a good fit or not. So I don't think it's not like it's a missed opportunity if we pass from your deck. It just means it probably wasn't a good fit for us. So we like when people send us a deck. Nowadays, people really like the Notion, like sending a Notion and a narrative structure. I actually like that too, to be honest. I've always said that decks can be way too busy, and that like my favorite type of deck is where you get one key point across on every slide and you really keep it like a nice, crisp, linear story. And a Notion is really good for that. Notion gives you like effectively like this narrative structure, like an outline. So I don't mind getting Notions provided the content is there. So I actually kind of like it.
Yeah, they're pretty popular here in the community. So
yeah, I think it's effective.
Yeah. Hey, Gabrielle, do you want to jump on?
Hello, Jeff. This is really interesting. Thank you very much. I'm a big fan of Fresha as well. So I'm building a B2B SaaS-enabled marketplace, which we do want to kind of replicate what Fresha has done, but in the creative industries for places for film shoots, photo shoots, rehearsals, auditions, all that sort of thing. And I have a few questions. I'll try and stick to one for now. With early stage, but we've been going over 12 months. Any suggestions on figuring out rough LTV at these early stages? Like we had our first person who ever booked on our site was in like 2019, and they just came back to book last week. So we haven't lost them as a customer yet. And then we have people who will book like 2 weeks apart, and it's really hard to tell it's hard to figure that out.
Do you have any comps or peers that you can look at?
Comps or peers? Sorry, I don't.
Like in other words, it sounds like you don't have enough data to tell from your own platform. So are there any is there another place you could look at customer behavior and try to extrapolate from there?
Okay. Potentially. There are other marketplaces that are similar to us that we could look at, I guess, including Mike's.
Yeah, I mean, I would try, like, because frankly, like if you don't have enough data yourself, like I think people will probably have the tendency to like try to put it in the best light. But I think that there are ways, like I don't like trying to come up with a best guess for the way the customer should or may act. And so who is your prototypical customer? What would their behavior look like? Why do you feel that way? I mean, that's enough for me.
Okay.
What I really want to see is that you're like, first of all, that the economics should work. I want to make sure that this is a viable business model, but I really want to make sure that you are truly analytical and that you have done the work and that you can convince me of your argument, that it's like logical and it's well-founded.
Yeah, sounds good. And then just really quickly, when is the best time to get in touch for? So you said I've looked through your website and you do pre-seed and you do the 220K, but you say that you want a lead investor in place. Do you want that before we get in touch, or are you okay with being in touch before that?
In a perfect world, yes, because then it's actionable for us. What sometimes happens is we'll take a call with you. And then we'll say, okay, that was great. We really like you, but you don't have a lead in terms. So like, let's get back in touch when you have a lead in terms. And sometimes like that's bad for both sides, because then that puts the onus on you and you have other stuff to do. So like to the extent that you're running a formal fundraising process, if you talk to us in like call it the last 25% of your fundraising process, then we can immediately take action. You say, hey, we have a lead in terms. We got, 400K left. Then we can go to our IC and we can make a decision right then and there.
Cool. Amazing. Thank you very much.
Awesome. That's a great question. Did you have another one, or you good?
I did have one more. I can ask that. It was you talked about you get hundreds of decks, I'm sure. But you specialize in marketplaces, and in my tendency, I always do an intro to before the deck that says, hi, I'm reaching out to you because X. Clearly for you, I'd be reaching out to you because you invest in marketplaces. But then I've also done some research on your founders. So like, I know specific reasons that I would reach out to Fabrice, like he's interested in films. He's got an entire backlog of film reviews in his website. So yeah, like, would you want an intro like that, or would you just immediately jump to a deck if you got an email that said?
It definitely improves conversion because it shows that you have done your work and that you care, and that like we get so many silly like blast submissions where like it'll be like, yeah, I don't know, it's like very clear that they sent this to hundreds of funds, and it's like very low effort. If you were to send us a sentence or two like that, that's going to increase your conversion dramatically. That's just advice in general. Like, I mean, the incremental effort to do that, if you think about the amount that it'll improve your conversion rate, it's definitely worth it to do things like that.
Okay, cool. Thank you.
Awesome.
All done.
Hey, Patrick, do you want to jump back on to another question?
Yep. One other question I had, Jeff, for you. I know you guys invest in a lot of kind of international marketplaces. There's also a lot of these kind of vertical marketplaces that are reaching scale in the U.S. I think like ACV auctions, right? If you read their F1, they say they're going to expand to every country. That's the giant opportunity. There's also like a clone in every country that's currently being launched. So when you think about kind of the internationalization of B2B marketplaces, do you bet more on the local guy winning, or do you bet more on the one that's reached scale coming and basically doing an Uber where you take the learnings from where you already are and all the funding you've raised and you kind of just flood the zone and take over? So how do you think about that kind of tension when you're looking at marketplaces?
We did an ACV fast follow in Europe. So we do like the local guys, provided they're credible and they're able to raise funding. So the whole like, what if ACV comes to Brazil? I mean, well, 9 times out of 10 that doesn't work. Like ACV still barely scratched the surface in the US. Like at the TAM, I mean, the US marketplace 9 times out of 10 should focus on the US and grow the US before going on. And especially like is Brazil the number? Like, and we did one in Germany, but like it's just a matter of focus. There's almost no market where I would worry about a US competitor coming in, just because the US is like such an amazing, the US is so massive that 99 times out of 100, they should just keep growing within the US. I mean, remember, like most of these marketplaces, you're stealing from offline penetration. You're not stealing from competitors. You're growing the market. Like if you look at the ACV's penetration, it's still tiny compared to offline. So there's still so much more room to run.
Gotcha. That's I think you're probably right. Yeah. I think some of these companies overestimate their ability to crack new markets.
No, it's a different story. For example, we're in Instacaro in Brazil, which is kind of like an auto one for Brazil. I'm more concerned about Kavak, which is the Mexican competitor, which just raised $1 bazillion coming to Brazil. Like that's a different story. If you're you have like a local regional competitor that is like part of their plan is to expand into your geo, and like it makes sense that the Mexican startup will come to Brazil. Like that's a different story.
Gotcha. Yeah. Thank you.
Yeah, that's a really great question. So, hey, Levi, do you want to jump on?
Yeah, Jeff, how's it going? Levi here.
Hey.
So outside of having my own startup, I also lead the fundraising conversations that we provide to the group on the first and third Friday of each month. And I think part of this is already after Gabriel's question of like, when's the optimal time to reach out to FJ Labs? One of the other things that I'd love to hear is like, because essentially you guys are sort of, I think, strategic capital that sort of joins around, right? Especially once there's a lead in place. What are some of the things, at the pre-seed or seed or even Series A that some of these teams can expect to receive from FJ Labs, right? Given sort of the focus, right, within marketplaces, and given that, I think there's just a lot of value out there where if you go to more like a generalist fund, well, that's not always, even if they have a platform, can they sort of help in some of these things? So I'd love to hear that side of it.
Well, a couple things. First of all, we know where we are in the quote unquote pecking order. We are not trying to be Andreessen with a 200-person platform team. We're not even trying to be a lead who takes board seats. We're trying to be small, passive, but we want to basically punch above our weight class in terms of being helpful. So for 300K and for a 300K angel ticket, we're not claiming to be operational. We're not claiming to be like that like the quote unquote traditional VC value add. What we are offering is the marketplace expertise from having built 10 marketplaces and investing in 500 plus. And when you reach out for us, we will do our best to help you when you reach out to us. And then mostly access to the FJ network. So in addition to our massive portfolio companies, we also help you get funded in your next round. Now, imagine you have Bessemer lead your Series A. Bessemer is not going to make lead VC intros for your Series B. Bessemer will want the first look at your Series B, and then it's a negative signal if you're Sequoia and you get an intro from Bessemer, because what's going on here? Why is Bessemer Bessemer? That means they didn't lean in. That means they didn't double down on the B. That means there's a problem. It's a huge negative signal. If we come in alongside Bessemer in your Series A, we don't have the same incentives as Bessemer. When your Series B comes around, we are happy. We're delighted to introduce you to Sequoia, Greylock, Firstmark, Andreessen, everyone. And there is no negative signal. So they will opt in, and they have worked with FJ before, and many times they've actually funded Fabrice or Jose in their startups. And so it's like a very strong signal when we introduce and we broaden your potential fundraising base for your Series B. So offering the fundraising intros is where we frankly get the highest marks, where we basically help diversify your funding base and we de-risk it for future rounds.
Awesome. Quick follow-up on that. Do you guys then, because you talked about getting access to the FJ network, you guys then follow similar to the Kleiner methodology, right? Which is you get sort of all of these companies, especially if there's synergistic effects of working together, or is it more so you just allow the founders to see, to reach out and to connect with another, or is it like have you guys sort of brokered those partnerships and relationships when it makes sense?
So we don't do much brokering per se. Like I know Andreessen has like a whole, almost like a pseudo M&A team. Like what we do is we basically say, hey, you're the auto one of Brazil, you're the auto one of Greece. You guys should chat. And we don't even proactively do it. We say like, hey, we'll like have a catch-up call and be like, hey, you know that we also just invested in the auto one of Greece. Like, would it be helpful for you guys to chat? And they'll usually say yes. And then we connect them. And then hopefully some magic happens. But again, like it's really passive, not active. And we don't claim to be like active and like, pushing on you. Passive, but helpful. Like Fabrice and Jose, they found Fabrice particularly, he found that his board it was almost more of a pain than like super helpful. And so he found like when I was an entrepreneur, what would I have wanted? People to basically leave me alone, let me build the company. And then if I like can access and tap into their network and tap into their expertise occasionally, like I would reach out to them. That's what his dream was.
Awesome. Thanks, Ab.
Awesome. Those are great questions, Levi. So, well, cool. We're almost out of time here, but this is a really great chat, Jess. So thanks for taking the time to join us and share all of your awesome experience and insights with us. Before we wrap it up, though, I'm interested to learn more about, what's one kind of market that you're personally really interested in?
This is cliche nowadays, but I'm personally obsessed with crypto. I think that I think that now we're actually starting to reach like the application phase of crypto, where don't get me wrong, like things are hyper speculative, hyper manic, and like, like lots of like Ponzi stuff out there. However, I do believe that, that this is kind of the future of the internet and network effects. So much of crypto is network effect because like, frankly, it is a different set of heuristics that we have to craft. Like, for example, I looked at Brain Trust in their seed or their seed 2. And I was like, oh, decentralized Upwork. Okay, like why? And I just didn't get the concept of like, in many ways, tokenomics is your new CAC. And like when you're incentivizing your early users, that's almost like in lieu of Facebook ads. And so it's something we're still wrapping our heads around. By the way, like on Brain Trust, I passed on a 90 million valuation because like they were doing almost no GMV. Now it's, it's something like 80x since then. And so like using the old FJ Web 2 heuristics, it was like a no-brainer pass. But perhaps in Web 3 land, those heuristics don't apply the same way. And we have to kind of like, think through how we should be evaluating these things. So that's an area of big interest for me personally.
Yeah, that's we actually had Gabe as a group chat guest, and he's in the community, and we have a whole Web3 space. So
cool.
We're all studying it ourselves and super interested in it too. So
yeah, sure.
Awesome. Well, cool. Well, yeah, thanks again for taking time to join us. This was awesome. Really enjoyed it, and we're of course big fans of FJ Labs over here. So
cool. Yeah, of course. Well, thank you for the invite. I really enjoyed chatting with you guys.
Yeah. And just before we kind of wrap things up, though, time for a quick plug. Where can we keep up with you at?
Well, fjlabs.com is our website. We actually have our investment thesis published there. I think it's literally like it says investment strategy. If you press that, you will learn 95% of what we do at FJ Labs. We're super transparent. I personally, my Twitter handle is Jeffrey W5000. Not much insight there. It's kind of my like random musings where I should probably just stop tweeting. But occasionally, sometimes I have some things to say. But I would say, frankly, fjlabs.com is the place. That's where we publish our playbook.
Awesome. I'll include the link to it here in the details of this when I get the recording up. So yeah. So thanks again, and thanks everyone for the great questions today too. So
thank you, everybody.